Good day Forex trader. Your USD Forex Signal, Euro pressured, becoming oversold. The pair will likely continue falling ahead of the latest US NFP data. Bearish view. Sell the Euro USD pair and set a take profit at 1.1050. Add a stop loss at 1.1250. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1175 and a take profit at 1.1250. Add a stop loss at 1.1100. The Euro USD is hovering near its lowest level since June 3, 2020 as investors weighed the diverging performance of the Eurozone and the US economies. The pair is trading at 1.1150, which is about 3% below the highest level this year. US and Eurozone economies. Recent economic numbers shows that the American economy is bouncing back at a quicker rate than that in the Eurozone. For example, on Friday, data by the German statistics agency showed that the economy contracted in the fourth quarter. Other countries like France and Spain made a spectacular recovery. While the German economy contracted, the American economy recorded a strong growth in the fourth quarter. That was a sign that the Omicron variant's impacts were not as severe as what analysts were expecting. Meanwhile, the American labor market has been stronger than that in Europe. For example, the American unemployment rate has declined to 3.9%. In Europe, the unemployment rate stands at about 7%. Therefore, the Euro-USD pair has declined as investors predict that the Federal Reserve will be more aggressive than the European Central Bank. Analysts have mixed opinions of the number and sizes of Fed's rate hikes. For example, analysts at Goldman Sachs expect that the Fed will make 5 rate hikes this year. Other analysts at other banks are predicting about 3 or 4 hikes. Central bank officials are also unsure about what to expect. In a recent statement, Raphael Bostic warned that the rate hikes could be in batches of 50 basis points each. This is substantially higher than the overall estimates of a 25 basis point hikes. On the other hand, analysts expect that the ECB will continue making its quantitative easing purchases and possibly not hike this year. Later this week, the Euro-USD pair will react to the latest US jobs numbers and the Eurozone inflation numbers for January. Euro-USD Forecast. The daily chart shows that the Euro-USD pair has been in a strong bearish trend lately. On the daily chart, we see that the pair managed to move below the lower side of the bearish flag pattern that is shown in black. It also declined below the 25-day and 50-day moving averages while the stochastic oscillator has moved to the oversold level. Therefore, the pair will likely continue falling ahead of the latest US NFP data. The next key stop to watch will be at 1.1050. Gbp Usd Forex Signal, bottoming out at $1.3475. Support at $1.3441 looks likely to be pivotal today. Today's Gbp USD signals. Risk 0.75%. Trades may only be taken before 5 p.m. London time today. Long trade idea. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.3375 or $1.3340. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 25 pips in profit. Remove 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to ride. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.3441 or $1.3490. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 25 pips in profit. Remove 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Gbp Usd Analysis. I wrote last Wednesday that the price was likely to move little before the FOMC release, so I was looking for scalps off reversals at key levels. This was an accurate call as the price did remain within the levels over the day as I had expected. Since last Wednesday's FOMC release, the US dollar has strengthened, which helped drive the price of this currency pair down. However, it is notable that the GBP USD fell less than other comparable pairs such as the Euro USD did, suggesting that there is some relative strength in the British pound. Since this week opened, the US dollar has sold off a little, allowing the price here to make what looks like a bullish bottom at $1.3375. The price is now rising and looks somewhat likely to continue going up until it hits the nearby resistance level at $1.3441. This is very likely to be today's pivotal point, and what will happen at that price will likely determine what happens to the price over the rest of the day. I believe the market could turn bullish on the USD again quickly, so I am prepared to take a short swing trade from a bearish reversal which may set up at $1.3441. If we get 2 consecutive hourly closes above $1.3441, especially within the first few hours after today's London Open, it might be best to look for long scalp trades above $1.3441, either buying on the dips or at a bearish retracement to $1.3441 as new support. Aud Usd Forex Signal, dropped to 0.6950 possible ahead of RBA. The pair will likely keep falling as bears target the next support at 0.6950. Bearish view. Sell the AUD USD pair and set a take profit at 0.6950. Add a stop loss at 0.7050. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7025 and a take profit at 0.7100. Add a stop loss at 0.6975. The AUD USD price retreated on Monday morning as investors waited for a relatively busy week ahead. The pair is trading at 0.700, which is about 4.35% below last week's high of 0.7320. RBA decision and key data ahead. The AUD USD retreated on Monday as investors reflected on the latest economic data from China. According to the country's statistics agency, the manufacturing PMI declined at a lower pace than what analysts were expecting. Precisely, the PMI declined from 50.3 in December last year to 50.1 in January. On the other hand, data by Cakeson revealed that the manufacturing PMI declined below 50 in January. It came in at 49.1, which was slightly below the December high of 50.9. Chinese numbers are important for the Australian economy because of the vast amount of goods that Australia sells to China. The next key catalyst for the AUD-USD pair will be the upcoming interest rate decision by the Reserve Bank of Australia, RBA. The bank is expected to first interest rate decision of the year on Tuesday morning. Analysts expect that this will be the most important decision the bank has done in the past few months. That's because the bank will provide more details about what it intends to do this year. There are 3 key scenarios. First, the bank could decide to end its asset purchases in this meeting. Second, it could start slowing down the asset purchases and then hint about ending them at a later date, possibly in May. Finally, the bank could leave the asset purchases steady and then hint about ending it in the May meeting. The bank's statement about these policies will have an impact on the AUD-USD pair. The pair will also move because of the bank's statement on interest rates. In the previous meetings, the bank has hinted that it will hike in 2023 or 2024. Analysts believe that it could provide a hint that it will hike this year. AUD-USD Forecast. The 4-hour chart shows that the AUD-USD pair has been in a strong bearish trend in the past few days. The sell-off accelerated when the pair moved below the key support level at 0.7083, which was the lowest level on December 20 last year. It has also moved below the 25-day and 50-day exponential moving averages, while the stochastic oscillator has moved below the oversold level. Therefore, the pair will likely keep falling as bears target the next support at 0.6950.